How do you grow your business when you run out of money? Stay tuned. Welcome to this week's edition of Note School TV. Well, where every Wednesday at 11:05 Central Time, we go live. And, we bring you the best guests. We bring you the most amazing content. And again, this week is no difference, right? So with that, a couple of housekeeping items. Number one, make sure and like this episode, right? Go ahead and hit that like button. If you have not already subscribed to Note Schools TV's channel, make sure and go ahead and do that. And then number three, boom, hit that bell notification so that you will be notified when? Well, when we go live every Wednesday at 11:05 Central Time. Also, keep those comments coming. We love hearing from you. We love hearing what you have to say, what's going on in your market. So please continue to do that. And if you would like to know more about what we do at Note School, simply go to noteschool.com/TV. Again, noteschool.com/TV. And let's go to the news, just like we do every week at Note School TV. So Reuters just reported, came out yesterday, that U.S. regional banks, they're facing increased scrutiny as their commercial real estate exposure stifles their buybacks. So regional banks, big banks, all banks, even publicly traded corporations like to purchase or do repurchase as far as their stock to increase their position in the market. Well, U.S. regional banks will probably have to start stockpiling more of their reserves, rainy day funds, so to speak, versus buying back their stock because of losses in their commercial real estate portfolios. So what does that really mean? And what does that really have to do with us? Well, really what that says is that with the banks having to increase their reserves, that is less money that they can lend to other folks to buy houses, to invest in other real estate endeavors. So it just means that mortgage credit availability index that we've been talking about for the last 3 years, it continues to get tighter. And there's that one part, we call them in Note School the penalty box buyer, and there's that one part that, just can't qualify conventionally. So the Fed also projected local or total loan losses at $571 billion under a severe annual stress test last month. And to top all of it off, credit card debt that has gone up to, almost $2 trillion over the past 4 or 5 years. There are starting to be a lot of defaults on those as well. So more to come on all of that. And let's do this. Let's go ahead and bring on Note School's founder, chief visionary officer, all around good guy, my friend, Mr. Eddie Speed.
Well, thank you, Joe. Today we have a terrific guest. This is a lady that I so respect. I've gotten to know her and her partner quite well, and I've seen them morph into traditional real estate investors with rentals and become very, very satisfied with growing their wealth and their portfolio in just being the bank and collecting payments. You guys, welcome from Houston, Texas, Miss Lois Meyer.
Hey, Eddie, how are you doing?
I'm good. How are you?
Great. Everything's good.
I said this in my opening, and I really do mean it. I respect you guys so much. So many times in life, Lois, we don't get to our mission that we meant to get to start with. Mm-hmm. And I respect you guys so much because you did have a rental portfolio and you worked really hard. And we'll talk a little bit about that. Okay. But when I met you guys, you were ready for a life transition.
Absolutely.
Right?
We had to.
And so that's part of that. Our show's theme today is really about recapitalizing your business. Now, you guys had some investment capital for sure,
We
right?
did.
But there's a point at the level you were playing, you were running out of money.
We did for sure.
And not because you didn't start out with money, it's just because you bought about 50 notes.
We did. We bought, I think, 54 notes in the first 13 months.
We're going to talk about that. We're going to talk about what that looks like and how you reposition yourself and kind of how you got there. I think our audience will be really interested in that.
Okay.
Okay. So let's start out. Let's talk about before note school. What did that look like?
So before note school, our plan was to acquire a lot of rental properties. And so we did that in Houston, and we actually went to the lower income areas of Houston because we couldn't get loans. We didn't have whatever the banks needed for us to get loans. So we paid cash for our properties, and then we rehabbed them ourselves. And then we turned them into rentals because we were going to use that big income to live on, retire. So this started, I'm 69 now. So that started about 12 years ago.
Mm-hmm.
So we started acquiring rentals. We would fix them up. We'd get them rented. We had no problems with our renters, great renters. The properties are old, but we did a lot of work to them, but it still took a lot of upkeep and maintenance. And so we acquired a portfolio. So we ended up with about 19 properties. Not all of them had houses on them. Some were just vacant lots, but we had a lot of rentals. And then we sit down and looked at the numbers. And taxes, property taxes especially, are very, very high in Houston. And so when we looked at the amount of money coming in, gross coming in, and then netted out our insurance and not even counting the time that we personally put into it, we realized that it wasn't a model that would sustain us. And so I was working at the time, and so we decided that we needed to do something different, but we didn't know what that was.
Yeah.
So our nephew
it was the rental property work game, right?
Oh, it was.
And it was there, and in the way I've heard you say it, it was like every weekend.
Oh yeah, to flip them especially was every weekend. And then, when you have, let's say, 15 houses out there, there's always something going wrong, always. And when you have older houses, everything always is going wrong. Yeah. So it was something that we knew we couldn't sustain as we got older, but also our big passion in life is to travel, and we travel internationally as much as we possibly can. And so we knew we couldn't hire someone to watch those properties while we were gone, field all the problems, fix all the things, and end up with any money at all. And so we knew we were in a real bind. So our nephew knew someone who was in note school, and he said, "Hey, this guy is talking about investing in real estate, and he gets money and no work." And I said, "I don't know, that just sounds fishy to me." So we met with the guy, and he was fairly new at it, and he just talked for like an hour. And I think I absorbed about, 1% of what he talked about. But what I did hear was, this is legitimate. You can make money and you don't have to work all the time.
Yeah.
And so from there, we went to 2 3-day classes in person, and decided that this was the model that we were going to do. And so we ended up, we had bought a note from him first, and just to test it out, because we wanted to make sure that that check hit the bank every month. And, about every month it hit the bank. And so we started, fortunately, at the height of the market, selling off our portfolio of rentals. And currently we have 4 rentals left for a variety of reasons, but we hope to have all of those gone by next year. And we put all of our money into notes and never looked back. And we were fat, dumb, and happy. We just, like, the first month we were like, okay, good, we've got the money. And so we bought 5 notes the first month. And when all the collateral files came in, I just set them out on the bed in the guest room. And I thought, wow, I don't know what I'm doing, but I've got no school behind me, so they'll help me through. And you guys did. And we will be eternally appreciative of your help.
Well, Lois, I'm an old cowboy.
I do know that.
And I've gotten to know some of the best horse trainers in the world in my days of cowboying. And there's an old saying, great horses make great trainers.
Ah, yes.
So what I would say is great students make great teachers.
Well, thank you for that. I appreciate that. But, the information you share and the knowledge and experience, because everything that comes up, we call you guys and you have an answer for it because you've done this 100 times before this very problem. And that was a real comfort to us, knowing that we weren't just jumping off a cliff into the abyss.
People frequently comment when they get around us. They say there's a lot of people in the training business that do a lot of training. They don't necessarily do a lot of the business.
Oh, absolutely.
And people comment frequently that, man, you guys you're deep in the trade, you're deep in the doing the business. And I think it matters. And we try to be relevant and try to, experience does matter, right?
Oh, absolutely.
So I want to really talk about, so what you did first was converted your rental portfolio to cash, and you owner financed some and you sold some for cash.
Mm-hmm.
Then that gave you the capital to fund your note business. And then all of a sudden you got to that stage, right? But where you had good capital to invest, but you ran out of money. And so then you're at a point where it's like, okay, do I stop? Or do I keep going? And if you kept going, what's that look like?
Sure. So we knew at the very beginning, because we've done a lot of business things, that we only had a certain amount to put in. And so we were already thinking about what do we do so that we can improve the number of notes that we have. Because we had a goal. We knew exactly how much we had to make or to bring in per month. And so we looked at that, and so we knew that we were going to have to get investors. And for us, we were fortunate because we have family that we could go to, and they, of course, trusted us. And so we were able to use some of their money and invest it for them so that they were making good returns, but it helped us to reinvest our money. So we were able to sell partials and then take that money to buy more notes. And so we started probably about the third month that we were in. So we were buying about 5 notes a month. And so about the third month in, we still had capital, but we had definitely been talking to our friends and our relatives. And so we had probably 11 people that we ended up investing with us.
Wow.
And I apologize for the light above me here. Anyway, and so these are people that trusted us, that knew us, that weren't investors themselves.
Yep.
And something that we learned, because we talked to a couple people that were big into investing, and they were not interested because they want to be the cowboy. They want to be out there getting the deal, making it happen and all that. So we talked to the people that were putting their money into CDs. And that is the key market for us. The people that, kind of had their money under the mattress, that had no risk tolerance at all. And by trusting us and that we would take care of them. And we did. There were some times that the money wasn't there for them to get their monthly payment. And so we made sure that they were whole. And we knew at the very beginning that we would need to do that in order to keep our credibility. And so that's what we did. We sold partials. We took that money, reinvested it. And so it allowed us to really double the amount of capital that we had in the notes in the notes market.
So I'm going to use my trusty highlighter, right?
Yeah.
This highlighter represents a timeline.
Mm-hmm.
Let's say this represents 20 years, right?
Oh.
So you buy 20-year cash flow with this loan, right?
Mm-hmm.
Say that you invested $100,000 and you're going to get $1,000 a month for 20 years. That's about right, isn't it? Something about that math.
Mm-hmm.
So you buy that cash flow, and then all of a sudden you need to recapitalize.
Mm-hmm.
So you sell half,
Mm-hmm.
this half of that cash flow for $98,000.
Yes.
That's the first half of the note, which is the most valuable part of the note,
Mm-hmm.
right? But now all of a sudden you own the second half of this note for a $2,000 investment.
Exactly.
Because you recapitalized and got 98,000 back by selling this half,
Mm-hmm.
the first half.
Yep.
And so I just wanted to show the audience kind of the math analogy here. And now now they can see, like, oh my gosh, Lois and Cindy didn't run out of money at all.
No.
They could they could propel themselves and build their own bank.
Mm-hmm. We did.
So I want to talk about like some intricacies. Like you said, something's really important. I've seen a lot of people that started out in the note business and kind of, and they come to a class and they understand the concept of doing a partial, right? We can, we've got good, framework in how we can teach that, right?
Right.
But then what happens is they go chase the wrong investors.
Yes.
They chase active investors who want a higher return and more control, right?
Mm-hmm. Yes.
And so you chased a passive investor knowing that it was a great deal for them, and it is.
Yes. Absolutely.
Right? But at the same time, they couldn't go find a deal. They didn't want to go find a deal. And then they were willing to tolerate a little lower return and to be a little more passive and okay to be guided. You were certainly not doing anything inappropriate, but you guided them in a way that let you make your deal work and then let them still earn a good, safe return.
Yes. And we graduated the years that we sold because we needed some income coming in as well. And so we would sell off maybe, 10 years and an 8-year and a 12-year. And so we kind of moved it out so that our money was coming in and at the right times for us in our life.
Yeah, I think you could look literally at your net worth on that piece of the business, right? And you bought with cash and got immediate cash flow and all that stuff too. But if you just looked at this part of your business, is thinking in terms of, retirement, right?
Yes.
Man, for a $2,000 investment, you got $100 and something thousand of payments coming in.
Exactly. And it sounds crazy. I mean, when you first hear this as a new student, you think, yeah, it's kind of like the used car salesman. It's like, yeah, this is a real deal here. But then you sit down and you do the math and it's like, yeah, the math is right. That is true. And I think that's important for new students to know is that, we can throw out numbers like you just did, that you've got all these payments coming in on a $2,000 investment, but it really is true. And that's one of the things that you were able to show us how that works. Because the first several times your mind is going, no, wait a minute, I don't get that. But after, watching you do it over and over again, it was like, okay, I get that. It works. And then you do one and it works. And you're like, okay, that's cool.
Look, we all can agree. You and Cindy are such smart people, smart in business, smart business executives, right?
We have worked in business a long time. Yes.
Yeah. But we don't know what we don't know until we learn it sometimes, right?
Sure.
So I would say that I think you represent a lot of our audience. You guys reached a certain age. At a certain age, you're not satisfied with your corporate retirement. And so you're then going to say, and hey, we're going to get in real estate and we're going to work and we're going to work on the weekends and we're going to do a lot of things that's going to change our life. And you did that. Your willingness to go burn the midnight oil was strong.
Absolutely.
But what you found out is that did not fit a retirement model.
No. And it doesn't really fit a peaceful lifestyle. I mean, even if you're working and not retired yet, you're spending your weekends or your nights or you're on the phone solving issues and problems with rentals, even if you have good renters, and we did. So it's not like it's not like you can just say, oh, great, I'll take this weekend off, because you don't know. You don't know, even if you stay home, what you're going to end up doing.
So you find this peaceful business of buying a note. You're the
Yeah.
bank, not a landlord.
Mm-hmm. Yep.
Right? So you
Yep.
buy this note and you've really become sold at this point. This is way easier than rentals.
Unbelievably easier.
But then you need to recapitalize,
Uh-huh.
and you need to then explain to your passive investor why you prefer this over rentals. Tell me about that conversation.
So people that are maybe have invested in rentals, thinking that that's passive income, if they've done it for any length of time, it's really not a difficult conversation,
Yeah.
because they know what you're saying is right. They understand, because they've been called out. Gee, I lost my keys, or my toilet overflowed, or whatever it is. We just went through a hurricane here, and so the first thing that we did, even with just our 4 properties, was go out and make sure they were all right. So the conversation is pretty easy for people who own rentals, because you ask them, you know, could you take a month off and go over to Europe and stay for a month and not worry about your rentals? Well, no, I couldn't. Okay. What are property taxes doing to you? What's your insurance cost right now? So it's the conversation is fairly easy if you just let them start talking about what they're experiencing. You don't have to talk about your own experience with it. And if you don't own rentals, that's fine too, because you can talk to people that do, and you can just ask those questions, and they will tell you what their experience is. And then you can talk to them about getting more of the money in to your bank account with less work, and explain how that goes. So it's not as hard a conversation as you might think it is.
Sometimes we find ourselves where we're doing something and we thought it was going to be way easier, and it's not.
Sure.
Right?
Mhm.
Rentals, right?
Absolutely.
Then sometimes we do something that we think may be way harder, and we find out it's not. Do you think that's true in notes?
Yes, and I think when you first start out, it's overwhelming. I mean, when we bought our first notes, it was overwhelming. I looked at these and I thought, I'm not sure which one I'm going to send in, where I have to record or anything. And so it was a lot of work, but it was a different work. I wasn't underneath a house in the mud. I wasn't, doing all the myriad of things that I normally did with rentals. I was having to figure out paperwork. And I had asset, I had Note School that could answer that. So I could pick up the phone, send an email, whatever I needed, and said, I'm not sure how I do this. So yeah, it was overwhelming to begin with, just the amount of information. But then we slowly started working through it. And then it was not that hard.
Lois, I want to thank you because you helped us change part of our business.
Really?
Uh-huh. You did. So we have Note School, which is a training business, and we
Right.
have Colonial, which is a note buying business, right?
Mm-hmm.
So what we figured out is there were things that Colonial could do for you
Mm-hmm.
that would take that pressure off of you. We had done for you services we could help you with,
Mm-hmm.
so that your first deal wasn't difficult, it wasn't overwhelming. And when you started with us, we weren't offering that.
No, not at all. You guys were great on the phone, but no, there was no done for you. There was no holding the hand, at as much as with this program. Absolutely.
Well, my team did a good job of listening,
They sure did.
and they started realizing, wait, if we could do this for people, if we could help people with this, then all of a sudden we're kind of renting our back office, so to speak.
Mm-hmm.
And from that became a lot of efficiency that would let you scale. And so you guys were rock stars when you came in. You were willing to do whatever,
Mm-hmm.
but we did gain so much from being able to say, oh, but this was a little difficult, or that was a little overwhelming. And so I appreciate that, because when we're talking to a new student today,
Sure.
what they have to do to get there, to to close those first deals,
Mhm.
first deal to the 5th deal to the 10th deal, is pretty different than it was. And so that's pretty awesome that that you shared with us, not just you, but I'm saying to you that the people that were effectively doing it, we said, how could it be better? And that's where I want to kind of get to, like looking back, like it's a pretty cool story, right? You bought a bunch of notes, then you run out of money, and then you figured out how to go take a passive investor's money and essentially fund most of your next notes.
Absolutely.
And you own residual income in that. And now all of a sudden, I want to go back.
Okay.
Like, what would you tell somebody if it were all over again?
Okay.
What would you do differently than you did that first time?
There's one big thing that I would have done differently. I would have started 20 years earlier. Serious. I mean,
I get it.
you know, we learned a lot just jumping in the way we did. And no one has to go through that now. You can do the Done For You program. But honestly, you know, I've been thinking about that question, and I don't think there's anything we would have done differently. I mean, it's been a wild ride, but we are not risk adverse at all. And we didn't lose any money on anything.
Yeah.
And we made more money than we thought we would on other problems. You know, we had a note that, you know, they just stopped paying and we had to work through that. But we ended up selling it and making a huge profit. And so that was something that we weren't sure about. I think people coming in, it's like, you know, one of their first questions is, well, you know, what happens if they stop paying? What if you have to foreclose on them and that sort of thing? And although that's time consuming, but no school has resources that they can point you to that will, you know, be the attorney in the area that will help, or, you know, whatever tax issues you have. So really, that has not been a negative in any of the properties that we've taken back. And I think
and today we have Done For You services where we'll help you manage part of that if you want us to.
I know.
It wasn't available then, but once again, we listened to you guys, you know, and said, what's the case? I want to tell you a funny story because I want to get your response to this. I think it's funny. It's ironic for sure.
Okay.
My father, who was originally a manager, like an operator, run pretty good sized construction companies, ended up in real estate. So he was selling real estate, and he got to his mid 60s. My dad was not. He's like, my retirement is not where it needs to be. Now, I was already working in the note business, been in about 10 years. And so I'm telling him all these stories of these partials and these, you know, these residual income and all this stuff, that how you could just take a little amount of money and work it really hard with these partials. And my dad, we went over there for one of the holidays, and my dad sat down with me and he said, I need to have a real serious conversation with you. And I said, okay. And he said, I'm ready to jump the fence right now and go in the note business. And I need you to help me. My dad's, you know, 66, 67 years old.
Yeah.
So my dad started in the note business at that age. Yep. And within about 5 years, he had repositioned his retirement so much that literally he didn't spend his wealth before he died and before my mother died.
Yep. Yeah, age is not a determining factor. Of course, if I'd started 20 years before, you know, I would have accumulated more, but there really isn't an age that you know, is too old to start, that you can't improve your position.
The reason I told you that story is, guess what my dad told me probably 500 times?
Thank you.
That he wished he'd have started 20 years earlier.
Yes. Yeah. When you see the potential of it, then you go, wow, you know, and then you try to get, you know, we have nieces and nephews, and trying to get our nieces and nephews involved. And I think some of them will at some point, but they're too busy living life right now. And so they will probably at some point look back and go, God, I wish that I'd started that 20 years ago.
Okay. You're a seasoned veteran. You're now a seasoned veteran note investor. You've been in notes about almost 4 years, right?
Yeah, we joined in 2000, so
Okay.
right before the pandemic, and so you can even do this business in the pandemic.
You did, and
Yes.
you guys you've bought just short of 100 notes. You're veterans,
Hmm.
okay? What do you tell somebody that's sitting on the sidelines?
You have to be an action taker. If you're not going to take action, then are you wasting your time?
Yeah.
Just put your money in CDs and make 1% or a 0.5% in that. Um, if you don't take action, nothing's going to happen. So it's kind of like you can give them a book, but if you don't open the book and study the book and learn, it's just not going to happen to you. So I'd say take action. No school's backing you up. No school now will do all parts of the note for you. So what do you really have to lose?
Well, it's so good. I mean, people ask me at the end of the day, like how, because I was a 20-year note buyer before I ever had a school, right?
Yeah.
Right. And so people say, why in the world did you ever build a school? And I said, I built a school so I could do business with my students. That was always my model.
Hmm.
I've done a lot of business with you.
Yes, sir.
Thank you for that.
Thank you.
And now all of a sudden I get to go see the joy of what it's done for you. And that's
Mhm.
beyond money.
Yeah.
Because it's some life impact. Now look, Lois, you're having an impact on other people, helping them step outside of their very traditional investments. And
Hmm.
look what you did for them.
Yes. Yeah. And it is a great feeling. I mean, we've helped, family and friends better themselves, get higher returns with absolutely no effort at all. And it's a win-win because we're making money and it's helping us do better, but we're helping them make money too. It's a really good feeling.
Lois, you're an inspiring person. I
Mhm.
really, really appreciate your sharing it with our audience. It has been
Sure.
such a joy to work with you guys. And you make teaching fun,
Good.
and you've made life better since I've gotten to know you guys. So thank you very much.
Thank you, Eddie. And we will always be grateful to you and No School very seriously because it has enabled us to live the life that we had dreamed about, but didn't know how we were going to get there.
That's awesome.
Yeah.
Mr. Joe, I'm going to let you take us home, sir.
Well, we have another edition of Note School TV under our belts. Our guest today, Lois. Thank you so much, Lois, for sharing your insights on, well, how to recapitalize your business as you do start running out of money. So with that, we want to thank you again for being on. Guys, thanks for being on today as well. And we will see you same place, same time next week. Have a good week, everyone.